Saturday, January 24th, 3:22 p.m. New York time. Welcome back, investors, to Winning Wall Street's Money. What's the situation ahead of us? This Wednesday, the Federal Reserve scheduled to meet 2 p.m. Eastern time to vote on short-term interest rates. The probability is they will leave it unchanged. The uncertainty is more so on the statement they're going to make, but the past going forward on the economics. Nothing wrong with sitting on hands and not putting on any new swing trades if you feel more comfortable. Day trading, lots of opportunities. But again, swing trading, nothing wrong with sitting on hands. And consider to wait for the action that may occur over 2 days. So the Federal Reserve makes statements in the afternoon on that day, Wednesday. Maybe the opportunity would be better to sit on hands and wait for setups and for the setups to occur with singles on that Friday, or if not, then days later. I prefer to choose value to get in a trade instead of being a degenerate, reckless, and just being with the crowd that has a majority being wrong. So go now look at the charts of the major stock indexes. The major stock index, first being the S&P 500. We are almost at the end of the month. Next Friday is the last trading day of the month. Congress has to make a determination or the government could shut down. Yeah, that CR bill too. Plus we have big earnings, financial institutions and other ones several days this week. Monthly chart, SPX, 5 years of history, all-time new high, higher high, higher low. Right off the bat, look how small the trading range is from the high and low. From these prior lows to the highs. That's concerning. Little bodies, big wicks, tops, bottoms, yeah. The middle chart weekly, we had massive consolidation here, a lot of price action, smaller consolidation, price action. We had big sell-off this week, lower high, lower low, big wick on the bottom, buyers stepped in. But again, the trend is still down on the weekly. We did close back inside that prior week. Well, that's good. In the daily chart, look, horizontal lines, the high of the year, the low of the year. What a whipsaw. Yep, imbalance area here has not got filled yet. The past two candles, I'm going to zoom out a little bit more so you can see how they look. Past two candles, Friday closes an inside candle. And that Thursday close as a doji. So we have two doji candles pretty much here. Doji means uncertain, potential halfway point or potential reversal. We'll see what happens when that occurs. Very concerning here. That is the major stock index for the year. So we'll look at the other stocks indexes inside of here. But right there, again, inside candle, that's a clue. Friday was uncertain. Weekly trend is down. Monthly chart, look, small little bodies, big wicks on the top and bottom. Go on to the next. The Nasdaq 100, part of the S&P 500. We're still below the highs of last year, so it's even weaker than the S&P 500. Yeah. Well, higher high, higher low currently for these trends, but again, still below the highs of last year, weak. Now the middle grid, weekly chart. Lower high, lower low. The trend is down. Big body, closed back inside prior week. Also, huge consolidation here. In the daily chart, the far left, imbalance area. It's trending higher, higher high, higher low. Want to look at the daily chart? Yeah, you can still see these lower highs. Very concerning. And gap down here has not even been tested. Go on to the next. Dow Jones Industrial Average, one of the oldest stock indexes in the United States. Monthly chart, all-time new high. We took out the high of last year. So again, outstanding. Took out the high of last year. Let's remove that. It's performing better than the NASDAQ. And again, monthly, higher high, higher low. Only has 30 companies in it. In the weekly chart, lower high, lower low. Dodgy candle up here. Suspicious. Daily chart, gap has not got filled yet. And for the week, trend reverse, lower low, lower high. Big consolidation here, big consolidation here. A lot of uncertainty. So again, this is part of the S&P 500. Let's go to the next stock index. The Dow transports. Just like it says, the Dow transports. 20 companies. Right off the bat, let's look at here. On the monthly, outstanding. We took out the high of last year. I'll zoom in a little bit. We took out the high of last year. We took out the high of 2024, and we took out the high of 2021. Let's open this up. Put it for 10 years. There we go, 10-year chart. Took 10 years to get back up. Well, not 10 years, but it took several years to get back to the highs. Big all-time new high. So we moved the highs of last year, moved the highs of 2024. So see this 2021 big bearish pin bar. Now, this monthly candle currently is not done yet. Very close. Concerning big wicks on the top here. And it's the Dow transports. It's not high tech. Weekly chart, the middle grid. Very similar. Bodies, big wicks, top and bottom. Might be distribution occurring. And the daily chart, big reversal after that bullish pin bar up here. Sorry, bearish pin bar. Yeah, that new high was made on a bearish pin bar Thursday. Makes sense. It rolled over. Imbalance area has not been tested yet. That is the Dow transports. Over to the Dow utility now. Monthly chart. Lower high, lower low. Again, look at that big monthly bearish pin bar last year on the Dow utilities. Weekly, inside candle, solid body equivalent to a red. Look at this. The high of last year, we're still below it. Big bearish impulse move down. Consolidation. Buyers are buying the dip. They are wrong. Big impulse move down even bigger. Big solid body labeled midpoint here. As expected, we came back and tested it, making the highs of this year, and sellers are there. So again, knuckleheads bought at the high there. Or maybe some people took profits. But again, somebody bought there at the high, followed by inside candle that's solid body red in here. That's a bearish single right here. That candle, 2 candlestick pattern. Big green candle followed by an inside candle that happens to be equivalent to a red on top of this minor trend here, which is to the upside. It's like a bearish harmony. So I'd be leaning bearish bias. I would not be buying. Looking for bearish opportunities if you want to trade this short. And look at the weakest companies in this index to be trading short. That's a good trade idea I just shared with you. Dow utilities far left on the daily chart. Yeah, huge decline. Gap here has not been filled yet. And we take this to the final index. The Russell 2000, the RUT. It's not part of the S&P 500. The Russell 2000 is very sensitive to high interest rates. It borrows a lot of money, the companies in there. A lot of them are not cash flow. A lot of them are small companies that don't have a global presence. What happens is when the big companies are very pricey and the market is very high, people that have less capital will go into the Russell 2000. Not necessarily because they think the companies are rock solid, just because they looking at momentum of the upside. Yeah. So again, this could be the index that falls the hardest. We took out the highs of last year. Outstanding. Kind of late to the game. Weekly chart forming almost a bearish pin bar. Balance area has not even been tested yet. Look at the daily chart. Friday, huge sell-off, big bearish candle after the bearish pin bar. Nice opportunities. So if you want to be buying the dip, also I'm showing you opportunities. Gap has not even been tested yet here. Very concerning. Thank you as always for spending just a little time with me. That's it for the video. Thanks for watching.